All right. Good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugodre, and we do this every Monday, 8 to 8:30 on this channel. Of course, you can catch this same episode on Nairametrics YouTube channel. Just go there, Nairametrics TV, and then you can watch a replay of this particular episode, of course, with me in the studio. And you can also always catch up on previous episodes as well. On our YouTube channel, as well as several other interesting, business and finance related podcasts and videos on our YouTube channel, Nairametrics TV. If you're not following, you want to know what's happening in the economy, you want to have things broken down, you want to know whether you should probably hedge against the exchange rate or hold on to your Naira, you want to know which investments you probably should be looking at and giving you useful insights. I want to hear from business leaders and economic pundits breaking down complex economic issues, things that affect your business. Just go there, Nairametrics TV. We've got something for everyone. We've even got novice podcast for people who don't even understand finance at all, but at least really want to know what's happening and got some things broken down for them. Of course, this show is purely, educational. I mean, we're not here to give you any investment advice. If you're looking for investment advice, you can always go to your stockbroker or your financial analyst. This is just purely my opinion. Mostly informative, yes. Now that that's out of the way, we go right into today's show. Of course, the Nigerian All-Share Index fairly gained during the week. Wow, yeah. One more time, dropped by 0.94% during the week, coming under 105,000 points. So it's currently at 104,962.96 points. Remember, I always said, one of the parameters for the stock market is whether it's over 100K or not. At some point, we're hitting 110K in terms of all-share index. That's the point. But now we're at 104,962, so slightly down from that 105 ceiling for the first time in weeks. So market cap also dipped below 66 trillion naira, closing at 65.8 trillion naira, while volume traded dropped to 2.9 billion shares. Kind of looks like there's little interest in the stock market at the moment for a lot of investors. So because when you have share price declines and volume declines, it sounds like people are investing less in that market and cycling funds elsewhere. But where are you guys putting your money? Where? Is it in real estate? Is it in treasury bills? Because, fixed income securities are also going down. But we have seen commercial papers numbers go up as well. So there's been a number of commercial papers out there going on above 20% or so. So maybe this is where some of those investor money is going to. And then we're also seeing, looks like there's also a number of profit taking going on in the market as well. So most sectors declined because this decline was basically across sectors. So it wasn't just, maybe like one index that's dragging, but like broader index, essentially banking, insurance, oil and gas, and industrial goods all closed negatively, and these indexes have some of the largest stocks on the exchange. And when these stocks sneeze, the entire market catches cold, like I always say. Only consumer goods index managed to eke out a gain, lifted by Nigerian flour mills, not the other flour mills. Those ones are gone already. All right, so who were the top 5 losers this week? Bottom 5 was Caverton Offshore, down 13%. They were a rider at some point, gaining massively after they made that announcement, but it looks like investors are done with that information now. They've basically digested it, and the share price is beginning to lose some of its allure. So down 13%. Universal Insurance also down 13%. Actually surprised that stock is still on the exchange. Like, this used to be my favorite stock like 10, 15 years ago. Unique. I think that's what they were called. I don't know if they're still the same company anyway, but Universal Insurance, 13.3%. Red Star Express also down 16.9%. It's a logistics company moving goods and parcels from one part of the country to the other, or inter or intrastate. Been on the exchange for a while. One of the better performers on the exchange, down 16.9%. We also got livestock feeds. That has been one of the better gainers of the last few weeks. In fact, early this week, this stock was riding high, hitting new heights. But I think kind of pulled back during the week as investors started dumping the stock. So it was down 17.55%. I always say, look, you got to be careful about stocks that just start to gain astronomically. You know why? Because a lot of stocks on this Nigerian exchange don't have liquidity, like they don't have a lot of volume. So yes, the share prices can climb easily because, of course, it's just limited volumes available. So if you go and buy when it is climbing, you might find it difficult to sell because it doesn't have a lot of liquidity. So there's probably nobody that's going to be able to buy from you. And then the share price just starts to fall and then you end up carrying that bag, right? I mean, capitalism is always about who's carrying that bag. So that's why you got to be careful about the stock. So sometimes you can see them just gaining astronomically. I just look away, I just look away because it's not every time, it's not all kind of money that I want to make or anyone wants to make. So you got to be very careful about this sort of stocks and have your own investment principles. But stocks that don't have enough trading volumes, enough liquidity, I just like to stay out of them. I mean, there are a few that I buy, but when I buy them, it's usually for the long haul. Just keep those stocks and hold them for as long as I want because maybe fundamentally I like them, or buy them when the share price is relatively low. And then it kind of becomes easier to sell because it's in demand at that time. But when you buy high and you're buying at the point where there's a lot more supply or there are a lot more people willing to sell than buy, and which means that you might just end up holding the stock that you don't want. Anyway, back to my top losers and gainers. So the top loser for the week was eTransact. eTransact lost a whopping 26%, 26.15% to be specific, during the week to round up the top losers for the week, top 5 losers for the week. Of course, for the top 5 gainers, coming up here in the bottom 5 is Mutual Benefit Insurance. That's an insurance company that has been listed on the exchange, but has not delivered any major capital appreciation value to investors, at least for as long as I know. Every now and then, sometimes you can just see it, pop up some gains and then it just loses again. It's just one of those stocks that I tell you about that just highly liquid. Sometimes you don't know why they are gaining, but this has been one stock that has been on exchange for years. I don't know what it's doing there. Never been a stock that you often see on people's recommendations or investors' recommendations. So, but it's an insurance company that has been in existence for years, and they actually do good insurance. In fact, I think I probably even use them sometimes. So, but as a stock, not really sure where they really are. It'd be nice to hear a lot more from Mutual Benefit, but investors rewarded it with 9.8% gain during the week. So who knows? Maybe there's something brewing in there. Academic Press, another penny stock, up 9.9% during the week. Not a stock that I'll have on my portfolio, obviously. Nigerian Flour Mills, which is one of the major drivers of the week, up 9.9%. Linkage Assurance, that's another insurance company that has been in existence for years at least. I've known this company since the early 2000s, so probably existed way before then. But in terms of giving stock market investors capital appreciation reward, I don't know. Doesn't look like one of those stocks. So I really don't know what's going on. It's a whole lot of movement around insurance stocks these days. I'm not sure why. Maybe because of some of the laws that are about to pop out. I hear that the National Assembly recently passed a bill. I hope I'm pretty correct. Passed a bill on that could also change the landscape of insurance companies in Nigeria. So kind of looks like maybe that is what is driving some of these insurance stocks. But man, I personally wouldn't touch them for now. There are just very few insurance stocks that I would likely touch that, have on my watch list. Nemeth Pharma was the top stock of the week, up 20.48%. So as you can see, most of the stocks that are in the top 5 losers or gainers, and not really one of some of those stocks that you probably want to, that you're probably familiar with, right? So you don't have those very regular ones that some of us are used to. But you know what? Maybe this is where the opportunity is. So, for them to be coming up here as top gainers, then I guess maybe investors have interest in this stock. All right. So we go on to other issues that happened during the week. Nigerian Breweries was also in the news. I'm going to talk about them later. There was some acquisition that they concluded. I'm going to look at that. Then Unity Bank also appointed a new acting MD. The former MD, I think tenure was over. And so they have a new acting MD for Unity Bank. And of course, CWG released its 2024 audited results. That's Computer Warehouse Group. I think I'm going to talk about that when I get back on the second half of the show. Bottom line for the market, well, market is still in correction mode. Looks like March is not going to be one of those very good months for the stock market. For now, it's pretty tough for a lot of investors. Well, it's also a month where we're seeing investors, profit taking profits off the table. We're seeing them as well, perhaps, take dividends as well, because this is the earnings season. I think April is likely going to be slightly different because you're going to have a lot of the big banking stocks release their results in April. And so you're probably going to see movement around there. But for now, looks like Nigerian stock market is a bit of a downer at the moment, with investors essentially taking profits off the table and stocks hitting lows. But like I always say, man, this is the best time to buy the stocks when they are going down. It's the best time to buy the stocks. So I do have my watch list. If you want to check my watch list, you might want to follow the money on our Telegram channel. That's a new Telegram channel we're going to launch in pretty soon. Also launching a new website, Follow the Money, ftm.ng, where I'm going to be having some of, my stocks on my watch list, as well as other important information, fully dedicated to the stock market. It's an exclusive website, by the way, so it's not a website for everyone. You gotta be a member to join Follow the Money watch list. You want to be the Follow the Money. You want to be part of the Follow the Money family. Then watch out for followthemoney.ng, ftm.ng, which we're going to be launching in April, and we'll be launching a Telegram channel with that as well. All right. So when we're back, a whole lot of news to chew on. A lot of stuff also happened during the week, and I'm going to be talking about them when I get back. So this is Follow the Money, brought to you by Nairametrics. Be right back. All right, welcome back to the second half of the show. This is Follow the Money, brought to you by Nairametrics. I remain Ugudre. Of course, we do this every week on the show, every Monday, and you can catch this particular episode on our podcast channel, or our YouTube channel, I beg your pardon, Nairametrics TV on YouTube. And of course, there's also Nairametrics on Spotify, so you can go there and listen to it if you want to just stream an audio version of this. Next story is AIICO Insurance, one of the biggest or largest insurance companies in Nigeria, and one of the oldest as well, been operating for over 40 years or even more, and been consistent as well, but struggled for some years now with different challenges and trying to fix their balance sheet. So they hit, their numbers were out during the week, and posted a 21% jump in pre-tax profit. But the numbers it wasn't everything in the numbers that was very good. AIICO paid out more claims than it earned from life insurance, which for most insurance pundits are not really good business. But I mean, it's always good to pay claims anyways. So claims was a major challenge for them during the week. So net insurance results was deeply negative at 25 billion, and dragged down by rising reinsurance and finance costs. But investment income surged 69% to over 45 billion, masking the underwriting weakness. So basically, insurance companies have the way that they determine how they make money. Of course, they're taking premiums from investors, and when they're taking those premiums, from those premiums, they pay claims. So the more premiums that you have for that particular year over the claims that you pay out, then that gives you an underwriting profit, right? So, but if you pay out more claims than premiums that you took in, then you have an underwriting loss, essentially. But you could also get saved by investment because, I mean, insurance companies basically taking all that premiums from you and then they invest that money into assets that can deliver useful returns. So, and they do this because, and there's always going to come a time when, let's say you have 1,000 people paying them premiums, perhaps maybe 10% of them or 20% of them can come back to collect claims. And the claim of one person sometimes can be a claim of 500 people. So to really meet up, they do invest a lot of those premiums so that those compounding returns can help soften any potential underwriting losses that occur. And that's basically what AIICO did during the year. That's basically what saved them during the year. So it did make 645 billion in investment income as well. So the share price is up 11.9% year to date. The result perhaps maybe not as great as one expected, but investment income has come to save the day for AIICO Insurance. One stock to watch currently on my watch list as well. IHS Towers. IHS is basically one of the largest tower companies in Nigeria. They basically provide services to the likes of MTN and Airtel, and their tower services are rented leased by these companies, and they pay them regularly. I think they also manage towers for some of these companies outside of Nigeria as well. But this is a stock that is not listed on the Nigerian exchange. It actually used to be listed on the exchange several years ago, and then it got delisted. So it's currently listed on the New York Stock Exchange. And so they released their numbers during the week. Of course, we don't just track companies on the Nigerian exchange. We also track companies on other exchanges as well, especially if it's related to Nigeria. So IHS reported a fourth quarter pre-tax profit of $236 million. And that was significant because that was the first time they were pushing out profit in a number of quarters. And 2024 was pretty much a bad year for the company. Because they did report a $438 million loss the year before. But if you zoom out of that fourth quarter numbers, the full year losses was actually $1.6 billion. Like, let that freaking sink in. $1.6 billion in losses was what they recorded in 2024. And guess why they recorded those losses? You know why? Exchange rate. Yeah, Naira devaluation. So it looks like, I mean, the GSM companies pay IHS in Naira, but they report some of their numbers in dollars because, of course, they are listed on the New York Stock Exchange. So that currency mismatch can be a problem sometimes, and that perhaps contributed to some of the losses that we're seeing. Nigeria is one of IHS's largest markets, accounting for about 59% of its Q4 revenues and 63% of its EBITDA. So EBITDA is basically earnings before interest, tax, depreciation, and amortization, which investors love a lot because it basically strips out all those accounting provisions that you have when you're looking at numbers. EBITDA is very close to cash on the larger scheme of things. Revenue for the company also dropped, of course, on a dollar basis by 19%. To about $1.7 billion, 20% actually, $1.7 billion, while its cash reserve doubled to about $578 million, giving it a lot of breathing room. And that's the point. So you see, I mean, revenue $1.7 billion, losses $1.6 billion, but that company is not going to die. It's going to still remain. And that's because, I mean, it has cash. Cash is everything, man. Cash, they still have about $578 million in cash. That's a significant amount of money that they have in their cash reserve, almost $1 billion. What am I even saying? $1 billion is like what? That's like 16 billion naira, right? Yeah. So they have half of that. They have about maybe 8 or so billion naira in cash. So currently very cash rich. The CEO, Sam Darwish, called Q4 a strong finish. Yeah, of course, because they made profits. He cited organic growth, cost control, and a drop in net leverage, that's net loans, as one of the major reasons that has boosted it. Total equity currently in red. FX headwinds still a big problem for them. Are they going to be able to sustain the momentum that they got in Q4? we will know. The Q3 numbers is probably going to be out in a few weeks, so we'll know whether they've been able to sustain it. But the CEO seems a little bit bullish. I did read a report during the week as well, suggesting that maybe the share price should be 3 times what it currently is. It's just incredible. This is a company that just declared $1.6 billion losses. And that report was suggesting that IHS could be worth at least around 3 times its current share price. Its current share price is about $4 or thereabout. And they did eke out. In fact, when these results were out, they were up to 2 or 3% or so. I'm like, what's going on here? But you know what? Investors look at this thing from different lenses, and so that's IHS. Now we'll move straight to CWG, Computer Warehouse Group, for that. What's their name? But they call CWG these days. So they had a standard performance during the year when, based on the numbers that was recently released. The company recorded a pre-tax profit of 4.4 billion, up 290% year on year, from the 1.1 billion profit they did in 2023. Revenue doubled, hitting 46.3 billion, up from 23.5 billion in the previous year, which is a 97% jump. So solid business for CWG. They've had a blistering year so far. But where did they get all that money from? Well, we did look at the numbers, and it appears that the performance was basically revenue came from multiple streams. They did make a lot of money from their software solutions, which they provide for a number of banks and a number of institutions. That raked in 16.4 billion for the company, which was about 35% of its revenue. Then they also made some money from managed support services, which gave them 14.5 billion in revenue, and then its infrastructure business gave it another 12.7 billion naira. So combined, these were basically like 95% of CWG's revenue. So solid numbers for them during the year. Its platform business added 2.1 billion, while its communications and integrated services brought in another 447 million. So looks like they're basically minting money like across all the business's division. But despite these revenue increases, they did experience cost of sale increases because, I mean, if you're making 40-something billion in revenue and you're making 4.4 billion in profit, that's basically like a 10% profit margin for the company. But they did do pretty well. So total assets is now close to 30 billion, 29.9 billion for Computer Warehouse Group. So solid numbers for shareholders of this company. Going to be happy about what they are seeing. They did also declare a final dividend of 39 kobo per share for its investors. So what do you think? Is this a stock that you probably want to look at? Who knows? I will be giving my verdict later this week, and you see if it's in my watch list. All right. So Nigerian Breweries is also making bold moves. They were also in the news, like I mentioned earlier. The company announced it had acquired the remaining 20% stake in Distill Wines and Spirit Nigeria Limited. So Distill Wines is a company that has several drinks in its portfolio. This includes 4th Street Wine. I'm sure you probably see that in supermarkets sometimes. Chamdor, Hunter's Dry, and Savannah Dry. They also are the ones who import Amarula. Amarula is some kind of creamy alcoholic drink, and Nederenborg and Bain Whiskey. They are the ones who import those ones. So Nigerian Breweries recently acquired them, and they basically, I've always had majority shares in that company, but they eventually took out 10% of the shares that were held by Ekulo International Limited and Next International Nigeria Limited. That name sounds familiar. Next, I think it's a company that is owned by a very renowned politician. Yeah, a very renowned politician that was supported a lot in the last election, but didn't win. I mean, so I'm sure you guys can figure that out. Anyway, why is this important? Well, Nigerian Breweries has acquired it and gives it an inroad into the wines and spirit market, which sometimes can provide very significant margins for most brewery companies. So that's probably why they're in there. Nigerian Breweries struggled last year, but they did deliver 1 trillion naira in revenue, up 81% the year before, even though they're still printed a pre-tax loss of 144.8 billion, the largest that it had recorded in history to date. And the company is basically doing a lot of restructuring, a lot of work to recover. And I think Nigerian Breweries is likely going to recover, just like Guinness is recovering. There's still a strong appetite for the products that they push out. Yeah, another major news was FirstHoldco. FirstHoldco announced that it's wrapped up is the first part of its capital raising efforts, and according to the company, they did claim that their rights issue was oversubscribed by 25%, pulling in 187 billion naira. They had gone for 150 billion naira in right issue, but they've done 187 billion naira. And the CEO Wale Adedeji called it a clear signal of strong investor trust in the company. I think next phase now is a private placement, which the company intends to embark on. They're trying to raise 350 billion naira. Kind of looks like if this company goes in with this raise and they're able to complete this, it's likely going to be one of the strongest banks in the country by the time they are done. So significant here for FirstHoldco. The chairman, Femi Otedola, also said he got overwhelming support and also applauded regulators as well. So quick recap here. Right issue 150 billion was targeted. They did get 187 billion. This is a company that also has declared dividend of 40 kobo per share for its 2023 numbers. Its full year 2024 numbers is not yet out. Probably going to be out sometime this week or next. And then they want to raise 350 billion in private placement. So this basically is follow the money for the week. This is all that has been happening this week. Remember, Nairametrics is planning its Capital Market Choice Award. It was meant to be in April, but we moved it to May because this is a purely merit-driven award, and we had to wait for financial statements of a lot of companies to be out because we're going to be looking at those numbers to determine who are the best companies. You want to know who's the company of the year, who's the bank of the year, who's the insurance company of the year, who is the manufacturer of the year. So we've got all these things in our Capital Market Choice Award, which will be coming up in May. Of course, if inquiries want to be part of this, you can always contact Nairametrics, outreach@nairametrics.com. Our email address, I can repeat that, outreach@nairametrics.com for inquiries. This is going to be one of the, best, at least, capital markets awards ever done. Yeah, because there's a lot of work going behind the scenes to get this done. Of course, don't forget to follow us on all social media platforms at Nairametrics and subscribe to our YouTube channel, NMTV. Follow the Money Hot Stocks will be back, but it's going to be for exclusive members only. I mentioned that. So FTM Hot Stocks going to be on YouTube. And then, of course, you're always going to have an FTM as well on the website and FTM on our Telegram channel starting April 2025. This has been Follow the Money, brought to you by Nairametrics. My name is Ugodre, and until we do this again next week, do have a profitable week ahead. Goodbye, everyone.